Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, November 3rd. All right. Today we've got the big taper announcement from the FOMC, so that's front and center on the board. Taking a quick look at futures, equities, as you'd imagine, is pretty much flat. Oil is down 2.2% yesterday after the close. The API, American Petroleum Institute, had projected an unexpected oil inventory build, so that put a damper on oil last night. But then this morning, we've got the IEA oil inventory report, which is considered, quote, the official one at 10:30. So we'll see what oil does there. Copper's up 1.33%. Everything else is basically treading water ahead of the Fed. On the macro front, we've got ADP jobs early. We've got factory orders. We've got ISM services. I already mentioned the oil inventory at 10:30. And then we've got the FOMC rate announcement at 2 p.m., the written statement, and then the Jay Powell presser at 2:30. Over on the earnings front, the only thing I saw this morning that may be of interest is CVS and Norwegian Cruise Lines before the bell. After the bell, we've got Roku. And actually, I was looking at that chart yesterday. What you may want to do if you're interested in that name at all, 300 on the chart is critical support. If you go pull up that chart and locate 300 and draw yourself a support line, you'll see that has been a line in the sand that has held for a long time. And I think Roku's been trading about 305. So something like earnings will either catapult it or crater it. And if you get a big down move, to push it under 300, that may end up being very, very important down the road. We've also got Qualcomm, Fastly, Etsy, and Apache after the bell as well. So let's talk about the Fed. And if you've followed me for any amount of time, I'm not a hardcore Fed watcher. I just know what I read in the papers, and here's what I think we're looking at. I think it's been widely telegraphed that what the Fed wants to do is taper at about $15 billion a month. They're buying 120 now. That would, if they stick to that game plan and start immediately in November, that would put us winding down QE basically next June. And if you look on the blog site this morning, I've got a taper timeline in there, a graphic that I included in the blog this morning that kind of shows you, where we are, the timeline for the taper, potential FOMC meetings through the back half of 2022 to show you where rate hikes could possibly happen. So take a look at that. So getting back to the taper, if he comes out and says we're going to go faster, like 20 billion or 25 billion a month, that'll be viewed as pretty hawkish, and I think that would have a material effect on the market. And if he comes out and says, well, we're going to do 10 billion, that's going to be viewed as relatively dovish. I don't expect that, but with inflation going the way it has been, that would be an impetus to, let's hurry, we're behind the eight ball. Inflation's raging. We got to get out of this QE faster, et cetera, et cetera, et cetera. And then there would likely be comments in the presser about inflation and transitory. And I think something that I think would not be well received would be changing the language around inflation. We keep hearing this word that's been beat to death, transitory. If he comes off of that and says, "Oh well, we've taken a look at it and it seems like it's more permanent now," I don't think the market's going to like that either. Again, I don't expect that. So, I think what we're most interested in, instead of the nuances around the Fed, I mean, we're traders. We're here to trade. And what I like to do or not do today ahead of the Fed, I don't think it's a great idea to go out and lay on a bunch of risk before this event. It's almost like an earnings event. Although we have a good idea, we don't exactly know what he's going to say, and we for sure don't know what the market's going to do. So today ahead of the Fed, what I like to do is just manage what I have. Am I okay with the amount of exposure that I have? Do I have any deep embedded gains? If you've got deep embedded gains on certain stocks, and you want to keep them, I would roll those up. Make sure you've got the gains, whatever gains that you have, in your bank, not on a piece of paper that's not really yours. So, roll your strikes up to even money and then stay long would be my recommendation. And then remember afterwards, if there is some kind of violent reaction, that rule of thumb that the first reaction after the Fed is usually fake. So don't get all panicky if there's a big red bar. Don't get loaded with FOMO if there's a big green bar. I think that there's going to be added volatility after the print, as there always is, and then it'll settle out over the next day or so, and then we can get a good read on, is the coast clear for a run into the end of the year, or did something that the FOMC said kind of derailed the thinking? So, watch rates, watch gold, watch the US dollar. These are things that usually react the most on a Fed announcement. So that's my thumbnail thoughts about that this morning. I'm going to zip through these. I know I always say that, but we always end up going about 40 minutes. And now that I think of it, don't forget to run your player at 1.25x. Some of you have even pushed to 1.5x, and that's fine too if you want to go through at a faster pace and then slow down if there's something interesting, or if you want to make some notes or something like that. I think that's fine as well. So let's look at the US dollar. We're in this consolidation pattern here between 94.5 and 93.5. So, and unless and until we get a big break higher or a breakdown, I think it's more or less the status quo. Here's our 10-year bond yields. We're running between 1.5% and about 1.65%. And what I've done here, because it just kind of jumped out at me, is this a head and shoulders formation on rates? One thing that I think would be bearish for the market is if somehow this were to break 150 and then go down into the 1.4 range or even lower. If you take this measured move, you can easily see that projected move would bring it down into 1.3s. And what that would signal is, we've got a reopening problem. We've got a growth problem. And right now, the baseline case is the COVID effects are decreasing. It's getting under control. The economy is building some steam, expanding, with rates going higher. And if for some reason they crater, that would mean something is really, really wrong. And the bond market is saying, that we're heading the wrong way. And that would be reflected in stocks. So I've got it drawn in there. That's not a prediction. It's just kind of showing what it is. So keep an eye on rates. And then, of course, TLT. Higher rates means lower TLT. We've gone back into this trading range. So just, watch your levels if you're trying to trade it. And I think you can't really get short here unless we break back below the 200. So the default here, just from a technical posture, is for TLT to go higher, which would mean rates lower. So if for some reason after the announcement today we break lower, break out of this box, break below the 50 and the 200 right here at 145.5, then that would signal rates moving higher. VIX, we had a little pop, and now we're back down towards 16. So watch VIX. A break below 15.75 would be really bullish, and you're going to see a lot of green candles on the chart. If we get back up towards 18, of course, you're going to see red on the board. But right now, it looks good. VIX has been contained in this lower third of the chart, which I think is bullish. We haven't looked at the oscillators in a while. This is the NYSE oscillator. Still towards the upper half, but certainly not overbought, overcooked at a point where we've got to be worried about a rug pull going the other way. So I think at this level, not really predictive of anything. So we don't need to be overly concerned about it. Same thing with the NASDAQ. We're up in the upper end of the range, but at sitting here at 35, that's nothing to get overly worried about. Moving on to equities, our equal weighted SPY, all-time high. No worries. We actually have kind of burned through any negative divergence that was on the chart. Why? Because now you can see that we're at a high, and we're also at a high in RSI, and we're at a high in momentum. So that's exactly what you want to see, a rising price chart coupled with a rising momentum and RSI. So these indicators are supporting a rise in price, and you can see our moving averages are bullishly stacked. We've got the 8-day in pink, the 20-day in blue, and the 50-day in green, all rising, all nicely separated. And so what we want to see is price continuing to ride the 8-day higher. And on any pullback, you want to see the 20-day contain it. And then that would be your buy on dip opportunity. SPY 2-hour, grinding higher day after day. We've got what I highlighted here is on momentum. We had a bleed off, but now we're starting to curl upwards. Unlike the equal weight, we do have negative divergence here. Why? Because we've had a rise in price, but a decline in momentum. We also have a decline in RSI. So that's a yellow flag. That's not a reason to sell, but it is something to be aware of. So I think as long as we can hold 460, I think things are in good shape. And here we are on the 30-minute chart showing you a really nice steady upward path on price. We spent a good amount of time on the upper half of the channel. Then we dropped down, and now we've spent a good amount of time on the lower half of the channel. And a bullish development would be, of course, to pop up into the upper half again, because I mean that's kind of how it goes. That's the purpose of the center line. You can see that the back here, the center line served as support on all these touches, and then once it broke, the center line was resistance. We had a touch here, 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 and here, and so this lower half of the channel has contained price. A nice bullish development would be for price to pop back above and then see the upper half of the channel be the zone where price operated. So that would be on a break above 462. I think that is your active pivot today if you're actively trying to trade it. Here's the equal weight QQQ. We talked the other day about a potential for a double top. We had a high here and a high here with falling momentum and RSI, but we popped out of that. You can see that we've made a new all-time high. You can see that momentum has broken above this downtrend line, actually burning through that bearish divergence, and we've got RSI, not quite as dramatic, but it is breaking above trend. So our indicators are favoring or supporting higher prices. And now on the equal weight, you've got a really nice line right here at 87.5, where you can say, okay, we're back on the upper half of this channel. We revisited the low. Now we've come back, and now we're above both the midpoint and lateral resistance at 87.5. So now we're in the upper half, and there is a open path towards the top of the channel. And that would be my expectation. And the only thing that would deter me from that is if we dropped back below. And you can see here also the moving averages are bullishly stacked. Now, when we go to the 2 hour on the Qs, cap weighted, you can see that we've been riding the upper half of the channel the whole way. And now we had a big move yesterday on the first bar of the day, and then we've spent the rest of the day consolidating. I think your pivot point here is 388. And so anything above that is full on bullish look. Nice RSI profile, nice momentum profile, way up high, the way you want to see it. Here we are, 30-minute chart, basically the same thing, just with some tighter resolution. And you can see after that first bar, we spent the rest of the day treading water. And so I wouldn't be surprised if this just kind of held the line in front of Powell and not really raced ahead, just kind of go into suspended animation until that rate announcement is made. Now on the small cap 2 hour, we had back-to-back impulsive moves. We had a big bounce off of the 50 on the daily chart, which lines up with the 200 on the 2 hour right here. We came down, we touched that, and then we had a big impulsive bounce. Then we had a big follow-up day. That was, what was that? This would have been Monday. And then Tuesday, we have, it was a consolidation day yesterday. We just kind of, toggled back and forth between a relatively tight range. And you can see this is building out a, what looks to me like a bull flag. They say bull flags fly at half staff. So what I'm hoping, and we always hope for how we're positioned, right? I'm long IWM. I'm hoping for a breakout of this flag and a move higher. And that would be aligned with the reopening starting to take hold. We've got, remember, the IWM is loaded with cyclicals, loaded with regional banks, loaded with reopening stocks, and those should perform quite well in a strong reopening environment with a lot of direct connection to the real economy. So from a charting standpoint, this looks really good. We've recaptured this upward channel, and we've got a bull flag at half staff. So hopefully we can break out here above 234 and go on up towards this measured move up towards 240 on a measured move basis. And here's the flag that I have drawn here. So on a break above 234.50, I think you can certainly be long. If you were to get a pullback to 233, I would certainly be a buyer there with a tight stop below. In fact, yesterday in the trading room, we got that tag of 233 right here, and I told the group, be a buyer there and set your stop just below. And always doesn't work like that, but in this case it worked, and we made our way back up to the top of the box. Not for any kind of world record gains, but $1.50 is $1.50, and I'll certainly take that. So anyways, the 30-minute chart on IWM looks really good, and what would give me a great amount of pause would be this thing collapsing, falling below 233, and then coming, quickly back towards 230 or 230 and a half, and then back to this gap. That would not be pleasant. So, if you're watching, set your alarm there just below 233, and you can see there's a big void in this chart. If this thing breaks, there's nobody home, and I would expect a fast move down to this level. And so that would be a nice, $2.50 move, and that would be a nice intraday trade. There we go. Okay, I want to take this little moment here to welcome any new visitors to the channel. I really appreciate your time this morning. What I try to do each and every day is go through the indexes and the FATMAAN names to give you key pivot levels that you can actively pivot. What I like to do, unlike some others out there, not that it's right or wrong, it's just my personal preference, is to understand and be very comfortable with a select number of stocks. And I've found that between the indexes and the FATMAAN names and maybe a couple of others, that keeps me plenty busy rather than going to a screener and, getting, 5 or 10 new names each and every day. That doesn't fit what I want to do. So, anyways, that gives you a little insight into my philosophy. So if you appreciate having all those pivots laid out for you so you can focus your effort on your execution around those levels, then please hit the subscribe button and the alarm bell, and you'll be notified of all my content. And then jump over in the show notes, and you will see a link to the website where you can drop in your email and register for all my content. That way, morning, noon, or night, when I send something out, you'll get it right in your email box, and that would be awesome. And then you'll also get an invite to our trading room where there's a lot of good ideas, a lot of good traders that are very generous with their time. We've got a couple of new additions just in the last couple of days, and good to see those questions being answered by those newer traders. And usually someone is quick to step in with answers and help along the way. So that's great. So, and of course, longtime listeners, thank you so much for supporting the channel. I hope your trading's going well, and I hope the content is helping in that effort. So Facebook had to break into the big gap, but was rejected up here at 330, 350, 334 area, and now we're back below. I think it's pretty clear the pivot right here is at 329. So above that, I would be long, looking for a move back up here to 334. And as long as it's below, I think the door is open to come back to test this 323 area. So been pretty volatile lately. If you catch it right at the at the levels, you can make some good money if you're watching and on top of it. For instance, yesterday, this reach down candle to 323. I mean, that was your buy. That was a good trade down there. Catching these levels, you had this reach up here to this well-defined level. There again as well, odds are in your favor that it was going to be rejected there. Why? Because it got rejected here, and you got to make price prove it. So get short with a stop just above, and then if your stop gets taken out, honor that stop. You're wrong, and quickly reorient yourself to a long position, because this is obviously an important level right here at 334. So, and this likewise is a well-defined support level because of the large volume over price bar here. And you can see that there's been a lot of reactions along that line. So that's how you can use the levels to your advantage. And, when we go over to Apple, I've got this little thing here. That's why I draw the lines. And it is why I draw the lines, actually, to help and trade around. We got this move, and it came right up to a line that we have had on the charts forever. In fact, it goes back off the chart. I mean, if I were to back up the chart, you'll see that that was a big line of resistance in the past. So that's why that line, that level was carried forward, and it came right up to it and then was rejected. And it's not a coincidence that at 150, that's where it stopped. Why? Resistance, resistance, about 5 resistances or 6 resistances here, kept reaching up to 150, getting rejected. So that becomes a very important line on the chart. And so it's not a coincidence that broken resistance becomes support. And you actually even saw it right here as well. So that's how these lines of support and resistance are formed, where you've got a lot of reactions along one particular line. So today, your pivot is 150. Anything above that, you can be long. Anything below that, you'd be looking for a move back down towards 148.50. You'll have to decide if trying to, play for that $1.50 is, worth it for you or not, or if you want to just play to the long side. That's personal preference. Tesla didn't do a whole lot yesterday. You can see that just sitting on this line here about 1170, give or take. Yeah, 1170. That's your pivot level. I've drawn in a line for reference. If price were to break this uptrend line, then you've got a big void here in the charts, and I would be very careful, because my expectation would be a quick move back to 1100. So if you're long, which most people are, that would be a point to get out of that position and see what happens. You'll have to decide if you want to try and do a short at that point. But on a break of this trend line, my expectation would be a pullback to 1100. But support is support until it's broken. I wouldn't try to front run that for sure. The stock has just been insane, and chances are it's going higher, not lower. Microsoft, nice day, just keeps grinding higher. Very strong chart. What I've done is raise up this level to just around 332. I think that's your pivot for today. Anything north of 332, I think you're fine. Stay long. Nice uptrend channel. Strong stock until or unless price falls out of this channel. I don't see any reason not to be long Microsoft. Amazon has been, within the whole scope of things, struggling a little bit more than the other stocks. We've got price back down here to this 3,300 level. And I've marked on the chart this line of reactions, support, 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 and support. So we're definitely at an important level. And if you were bullishly minded, you certainly wouldn't want to see a break below 3,300. That would kind of open up the floodgates for a move back down here to 3,240, 3,250 area, and then below that back to 3,150. So I think you can stay long against this 3,300 and then see if you don't get a move up to 3,340 and potentially 3,380, which is another important level on the chart. Google. We tested the highs, came up for this little double top, came back, had a good day or a good open yesterday, and then kind of back tested this gap. So I think you can be, and we've talked about it. We talked about it yesterday, and I believe the day before. You can stay long against 2,900. Excuse me. And as long as the market stays intact, I think Google is going to go higher. If you decided that, I don't want to mess with it here, then set your alarm at 29, just above 2960, and then buy the all-time high as it moves towards 3,000. But this is as good a place as any to get long, and then you have a very tight stop against this gap right here at 2880. Netflix. We had one bar yesterday that everybody got excited. There was I think a tweet or some news release that Netflix was going to start putting games on mobile phones. I don't know if it's a test or they're actually doing it, but they quickly faded that bar and came back. But still, very bullish chart. I would be long against 675 and look for price to make a move back towards 690, 700. If we were to drop below 675, then you're going to come down here and test this gap and possibly pull back to 660. Again, that would be a place where I would be a buyer if I wanted to be involved in Netflix. Semiconductors are starting to get their mojo. We had a big impulsive move, building out a bull flag and ready to take the next leg higher. Rising PPO, rising RSI, that's bullish. Remember, we're in blue sky territory with a measured move target of 295 from the big breakout from back here. And you can see we've had this the whole way, right? We identified this double bottom. We had a double bottom target. We knew that we broke out from this level. We said we wanted to be long here, and we made our way to take out that measured move target. We've held the uptrend line, and we continue to move higher during this bullish run. So now we've got a bull flag here. I think anything above 278, I think you got to stay long. And if you were to get a pullback into 276 that held, that would be a great place for an entry. Why? Because you're back at trend and you've got another level of support here at 276. So that would be a nice place to get long. If you got, say, a reaction from the Fed today, or for any reason, come back to trend, that's always an objective place to take a long in either your swing trading or your active trading. Trend lines are always an objective place to make a trade, either on the long side or the short side. If you're up at the top of a trend, those are objective locations. We had talked about ARWR yesterday. I sent out a morning note about it, I believe. Or what was it? Must have been the afternoon, Monday afternoon. I had set an alarm long time ago after this big drop, and I got a trigger on that. I sent the alarm out to you guys, said, hey, we got a gap entry, and we got a beautiful follow-up candle yesterday. So anybody that took that trade has got to be very, very pleased at this point. And now my expectation is for a gap fill. So that's what I'm hoping for. And I couldn't let the video end without looking at this Avis. Yesterday, Well, first, this thing was trading down 100 and made a quick move to 160. And then yesterday morning, after their earnings, it went ballistic. It went to 540. I mean, when a $160 stock goes to 540, I mean, something insane is going on. And, you know, people were talking about, oh, it was a short squeeze, or, oh, it was the apes. I have no idea. I was just a spectator. I mean, this thing was halted about 8 times during this run-up. I mean, I can't explain it, but we've been seeing more and more of this type of just absolute craziness come out of nowhere. I don't exactly know the reason for it. I don't know if it's massive call buying or, you know, a low float type situation. I really can't explain it, and I didn't really see any tweets or posts that gave me confidence that anybody else really knew either. But I mean, that's definitely a life-changing event if you had some calls in any kind of numbers. I mean, that's the kind of thing that you can make $500,000 on in a few hours if you catch that kind of thing right. But that's pure luck. That's a lottery. You can't count on that. So it is what it is. So let's wrap it up there. Jay Powell, be careful loading up on a risk ahead of the announcement. Trade what you got. Be ready to move afterward towards the end of the day, most likely into tomorrow. I'm gonna take it easy this morning, as I discussed. If there's a intraday trade that looks great, I'll take it. But otherwise, I'm gonna be diving into the charts. And as a matter of fact, I've got some chart setups that I'm going to forward you this morning. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.